Good morning, everybody. The have they, haven't they intervened question still remains and looms large above us. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. It's going to be one of those where we'll have to wait for the start of November to know what the Bank of Japan did, if they even show it somewhere in their books.
Yeah, because there is a case that they might have sent out, as you call them, the submarines, i.e. sent out firms like the GPIF and others to do something in the market that isn't officially done by the BOJ. Just one of the many things they can get up to over there. But yeah, we have to wait and see. Even so, the market's still a bit nervous about taking on too much in dollar yen at the moment. Bank of Japan's Ueda yesterday declined to comment on currencies and the question of intervention. So he's remaining tight-lipped as well, probably managing some of his positions, no doubt. PM Kishida says he's going to ensure that the surge of wage rises is sustainable. That, as we know, is his big thing, his big ticket that he's going to be concentrating on for the Japanese economy. Coming over to the ECB, Centino says we can expect that the interest rate cycle has been completed by now and with the present conditions. De Guindos has said that economic activity likely to remain subdued in the coming months. Underlying price pressures remain strong, but most measures of inflation have started to ease. ECB's Casimir, one of the hawks, is happy that we've stopped hiking, but says we still need to wait for December and March outlooks. So don't do anything, folks. We're not allowed to do anything till we get the March ECB projections. That's his way of really kicking the can on that. Obviously, the markets aren't going to wait that long before it starts deciding what it wants to do or expect from monetary policy. Some of the data this morning coming out of Europe and the like, a little bit mixed. We got some construction data. There's not been an awful lot out actually overnight. We've got some trade data from Australia for August. Not looking too bad. Trade balance up. Exports up 4%. That shows good, but imports were flat. So lacking in activity there, but exports looking okay. As I said, we got also some trade balance data from Germany. And as you can see, activity not looking too hot there either, even if value-wise the trade balance has improved by over $1.5 billion. But as you can see, down on exports and down on imports as well. Industrial production numbers coming out from a few countries. There or thereabouts. France 0.3, minus 0.3 versus minus 0.4 expected. Spain a bit worse on the year-on-year number, down 3.4%. No real surprise considering we know that manufacturing and the like is in contraction according to the PMIs. On those we got some construction ones as well. Germany, again, looking the worst of the bunch, 39.3 from 41.5, but all largely reflecting what we've seen in the manufacturing sector as well. Italy, slight improvement, but still in contraction. The UK as well, falling back further. Wasn't expected to fall too far into contraction, but it did. Went to 45 from 49.9 expected. Likely that's going to go further after PM Sunak announced the end of what's called HS2, high-speed rail line number 2 for the UK, which is causing a big political bum fight here in the UK at the moment. It was one of these things we like to do over here, which is have a great idea, take 30 years to put it into play, and it costs billions before you've even laid a single stone on it. And he's decided to chop that even after all the money spent on it, and it's causing a bit of a hoo-ha, as said. But maybe we'll see as that's construction. We'll see that UK number falling back even further next month when that all comes into play. We shall see. Looking at some of the other numbers, just going back to yesterday, we're obviously looking for the ISM numbers to see what those bring or brought. The S&P Global Services PMI, just a small pip change over the flash number, 50.2. So nothing to write home about there. The ISM, though, came in pretty positive all round. There were a few little wobbles in there, but overall matched expectations, did confirm the drop, but then prices paid held up, 58.9. Employment ticked down a little bit, but still looking fairly strong. Overall, you know, all the numbers still above expansion. So no real wobbles from that. The comments from respondents were all fairly bullish as well, or positive. No real negative comments in that. So more soft landing style data there. Factory orders, a nice positive 1.2, beating expectations month on month. Take out the big items like transportation, and it also looks healthy at 1.4%. So, as I say, tickety boo for the US, which is going to keep yields well bid likely, and expectations for that higher for longer poise from the Fed. In other news, there are still some strike problems going over there, and further strikes announced by Kaiser Permanente workers. 75,000 walked off the job yesterday. This is in the healthcare sector. So another strike, 75k workers walking out there. At some point, this might start filtering into the jobless claims numbers. We know we've got the UAW strikes, and it's just how they class things over in America. People who are striking can be classed as unemployed, which can, as I say, show up in the jobless claims numbers, even though they're not technically unemployed or you know, out of work. The classifications they use over there can mean there's a bit of skew in those jobless claims numbers. And if it's big enough, I think it can also impact the NFP to a certain extent, but I can't remember exactly how that works. But definitely for the jobless claims numbers, it can show up. We've got those today, so we'll keep an eye on that just to see if anything from that UAW is feeding into those numbers. But long and short, it won't be a surprise if over the next couple of weeks we see you know, some big jumps if it's down to those strikers going on over there. So be prepared. In other news, Turkey is apparently going to hold the next meeting to discuss Ukraine peace between what's called the Allied Gathering. That's going to happen in Istanbul sometime this month. Maybe it yields something, maybe it doesn't. In the meantime, Russia has moved all its fleet out of the Crimea region because Ukraine kept taking its boats out with sea drones. They also have been painting up their ships to make them look smaller, camouflaging them to make them look smaller. I saw that this morning because they are suffering having their boats parked up around there. That's all I've got. A bit quiet as far as the news headlines go. Further to that intervention thing, everyone's still playing the guessing game. We've had also reports money market data that's picked up in Japan wasn't showing any intervention, but whether that data was valid for that day or whatever, I haven't seen anything this morning on that, Kay. I don't know if you have for yesterday's numbers to see if it showed anything, but everyone is pretty much playing the guessing game. Why that's important is because if they haven't intervened, if it was just a phone around or something else, the market's going to rocket dollar yen again. That's why we have this interest in it. But I think the longer it goes on, the more the market's just going to go, yeah, it was intervention, and we move on. Have you heard anything new this morning, mate?
No, The only thing is, as you say, guesswork. People, conspiracy theories that they have not intervened, but they asked exporters to go and sit on the offer. They may have asked one of the post office or those pension guys to sell dollar yen, and it's just guesswork, you know. What there is though overnight is that apparently, and the timing coincides pretty well, although the rest of the dollars was getting hammered a bit as well. That exporters may have sold dollar yen over Go Toby Day. It would make some sense because we have seen $7-8 lower oil, so perhaps the energy contracts would have been less important than the exporter contracts. But it again, I mean, there's a lot of guesswork in there. I can't confirm, and I think we should leave it to there. If some form of intervention shows up, and as I said yesterday, I'm not sure we will even see it in those money market operations, because they may only be like in the receivables, the JGBs, what happened the week before, and things like that. I mean, it's all really speculation, right? I know some of the old guard people were commenting, saying that, oh yeah, they have done it in the past, asking, but really we are talking about 1990s. I mean, if you talk about what they did in the time of Sakakibara, when he was trying to keep dollar yen in a range, and there was very big suspicion that he asked exporters on the one side, pension funds on the other side, and importers to try and spread their purchases and sales for when dollar yen reached the extreme of what he thought would be the reasonable band. But okay, it's Japan. I'm not saying it doesn't exist anymore, and I'm not saying they didn't do it, but times are different. And as we were discussing as well, quite a few of those official pension funds and investment funds have outsourced some of their business, especially GPIF, or formerly JPIF. They have outsourced a fair part of their business to foreign asset managers, and I'm not even sure that they have an enormous amount of FX to do. They will at times when they need to reinvest or repatriate profits or so, but this timing doesn't seem right to me. So really, it's going to, for me at least personally, who have been market making yen for nearly 20 years, it just remains an open question.
Yeah, very much. Ali, I've got a mission with you, mate. I've got a mission to change your mindset about how you look at markets, because you ask what could be the market reaction if we get a strong NFP tomorrow. $150 yen, will it break? If I knew the answer to that, I wouldn't be sitting here talking to you now. I'd be on a beach somewhere, my own private island, with all the money I made, knowing exactly what markets we're going to do. We don't know what markets we're going to do. There is a possibility that it might go back to 150. Depends where we are at the time. Normally, we get 100 pip moves on a strong NFP. No, if you go and look at all the recent, go back 6 months, look at the numbers for the last 6 months, it's been very, very quiet. Typically, I can't recall the last time we've had significant 100 pip moves on the NFP. There may be the odd one or two in there, but there's been times we've had 30-40 pip moves on the NFP. So you have to expect the worst, or the worst case or most case scenario. You know, if you get a big variation, we're expecting what, 170,000 odd, I think. Let me just double check what the latest number is. 170,000 we're expecting. If it comes in, you know, 50k either side of that, you're probably not going to get too much movement, also depending on what the other numbers do. If it comes in at minus 100k, of course you're going to get a big move. If it comes in at plus 300k, you're probably going to get a big move. So it's all about expecting or knowing the expectation levels for going in there. Can it mean 150? Of course. It can also mean 145. So it's not what we expect it to do, or it's what it does do, and how you plan to trade it, what it does do. So if you want to get 100 pips out of it, well, you know it's got to go guns. It's got to be a big number. So if you're trading before the number, expecting 100 pips, and it comes in at 170k, then you've got to know what to do with your trade. So just come around where you're thinking a bit, guys and girls. You know, don't always be looking for rockets and craters, and you know every move is 200 pips. Dial your expectations down. Trade what the market does, not what you think it may do. But yeah, NFP, and we'll talk about that tomorrow anyway beforehand, and we'll dig into the numbers as we usually do. But in markets, anything is possible. As I say, if it was that easy, we'd all be stinking rich trading it, but we're not. So we just have to pick the pieces as we can. So anyway, looking at dollar yen that we've got here, it's ranging about a bit. You know, we had I had a level down at 148.5, and it went through that on in Tokyo times. You know, we're bouncing back up 149. Whenever we get into there, it's not pushing up much further. You know, maybe there's some interest around this 149 2030s where we got the bounce after the drop. So that's really the area you want to be looking at least in the short term. If you want 150, you got to get through 149.30. If you can't do that, well, then which other way is it going to go from there? So we're setting up some markers. I'm not overly keen on the text right now because, as I say, everything that's going on, the little bit of nervousness in the markets, you know, if someone suddenly panics and needs to sell it, your levels and your coloured lines aren't going to stand up to anything. So I'm just watching, seeing what develops, seeing where the market wants to set itself up. We're getting some development here, as I say, around 149.30. Now it's a little bit steppy downy to, you know, 149.10, 15. So just watch what it wants to do. Downside, I'm not sure where the downside is. If we get another test 148, 25, 30, well, then you're building up something there. But I just want to see the price action direction. I'm not taking a side at all in this one at the moment. The same can be said for something like euro dollar. You know, I've been banging on about this 105 line. It's your pivot line now. You know, we had the break under. We hit a barrier down here, 104.50. Those in the chat room would have known about that. Had a couple of goes at it, a bit like cable at 120.50. So at this time, I didn't flush it. They've had two cracks at it. It's held. We've had the bounce. The bounce I questioned yesterday. Can it get back above 105? It got up. It went back below. Undecided, and then bang, support. So technically, if you want to catch that knife, look for the evidence and the reason to do that. Your evidence is down here in the first instance, a little short-term double bottom. Even if you didn't buy it down here, your next level's up here. We're holding it. So that maybe gives you longs the conviction to say we're going to push on up. But then what has he got to do? Well, we can't get above 105, 30, 35. So the bounces off this level are pretty weak. So this is an 80 pip range, and it's deciding the price action and what it wants to do. If we hold 105, the longer we hold it, then the potential is for a move higher than the 105.30s, and maybe we get it back up to 106s again. Fine. If you break under here though, then this low's likely to be tested again. Then you want to see price action either coming in around probably 104.70. If you see a low there at 104.70, then back above 105, well, now this is really solid support down here into this level. So you let the price action develop. Remember, you know, I'll go back to the example of Kiwi. You know, looking at the Kiwi, what it was doing. Let's just go into an hourly chart. You know, big trend down, and then it hits a bottom, and then it just starts to build up off the bottom. Then we find support around other levels, and it You then get a decent bounce. Then we come back, we find a low, can't quite get back to those lows. So it shows you, that tells you there's strength in these lows because we're not getting there on that move. And then you get another bounce. But all this is over a few days, you know, week, 2 weeks. But that price action tells you that this move has potentially stopped. You know, that's what you want to see in euro dollar. But it's all happening over a very short-term basis at the moment. You know, there were all these little short-term points where the price didn't go down. And if you wanted to catch a knife, that's the reaction you were looking for. But you had to be careful with the bounces. Same thing setting up here. Okay, got a bit of a bottom in play, but it needs a lot of work to do to get and break the trend. So if you're trading longs down here, don't be expecting 107s, 108s. You know, the most you might hope for right now is maybe a move to 106. If you get that, then you adjust your trade and decide what you want to do from that. But that's how I play these things anyway. You know, I don't just blindly buy it off here and say, yeah, I'm going to shut my eyes until 108. You know, you could have done that all the way through and been wrong each time, every time you bought a low. But just look for the evidence of what's happening. Looking around some of the other pairs, dollar China, still, it's not looking as soft as it has been. Maybe that's still the dollar side. Maybe because China's on holiday, people are thinking, let's push some buttons. So it's looking at the moment, the price action is wanting to push up maybe to these highs. Again, that step in action. You know, we had these lows coming in, then we're back above. Now it's support around that 728 again. And now it's just edging up and the lows are getting a bit shallower. So maybe we are going to get a push on up to these highs. On balance, as I look at it now, that might be the case. Maybe when China comes in back to work next week, they start putting the pressure on it again and maybe we start heading down. But for now, I'm still in my short. I'm not doing anything around this 732s. I was adding into there and chopping on the dips and adding back and chopping, but I've left it alone. I've still got a bit of exposure around 732s, but I'm not adding to it at the moment because of this price action. And we'll see if it gets a push up there. I'm not doing an awful lot anywhere else really, because I'm just in a bit of sit and watch mode. I'm still long a bit of CAD or dollar CAD, now looking a bit more solid above 137. It was a bit undecided here. We had the breaks above 137 and the trend line and this prior high, largely holding it, but you know, I wanted to see a real firm bit of support coming in above that, and it looks like we've got it now. So we've made a new high this morning, so that's happy days. Beat yesterday's highs. It means this move has still got some energy in it. So now I'd expect maybe support to be coming in, you know, around about 137, 30s, 35s, just on an intraday basis. Do that again, you see another step up, then maybe we go and have a crack at 138 if we don't have a crack at that before it. And that's really the next level for me and where I'm looking just to take a bit of profit off there, though I've not got an awful lot left in the trade at the moment. But as you can see, back in early part of the year, 138, 138.10 was the resistance after we made that high to 138.60s. Getting a bit more help from oil, this one I think at the moment, because I was looking very much weaker, really undoing a lot of the move we've seen. So perhaps that buyer that was said to be the main buyer in these moves has now finished buying, and there's nothing else to support this market because it's coming back fairly quickly as well. Kay, you got much on your radar today?
Well, you covered already a lot. Today, specifically, not that much. There's a few things moving, and
Metro Bank's currently
hang on,
26%. Metro Bank
getting the squawk just for a little bit. I just want to show you something because when and I like to show this because that is giving you a sense of what the market is expecting. So those are the overnight options, right? And I see they are already for the expirations tomorrow. I thought they were only going to be after today's expiry, but it seems that they are already for tomorrow. So if you look at what the at the money, the overnight, the options market is expecting, you look at those prices, they again, and we've seen pretty similar over the central bank meetings. I think there was only the Fed, if I recall well, printing a bigger move than what the options markets were pricing. I think as well because the yields are moving, were moving pretty rapidly as well. But again, we are not the options market is not expecting an awful lot. Of course, there's more volatility in the yen. Sorry, because we saw that 250-point move the day before yesterday. But still, if you look at the total here, a 70-point move, and so you add that on, really either side to start to make money. If you would buy the straddle at the money, you have to make more than 72, 73 pips, right? In dollar yen, that's not a lot really. So the range, the expected range, is not really that big. If the expected range were to be very big, you would see volatility here more coming to 15%, 17% on the overnight. And if you look at the euro dollar, we're also far below there. Cable is a tad richer, but even so, yeah, excuse me. Even so, we're still only the straddle is only worth 56 points, which is not really a lot. So that gives you a pretty decent idea on where your expectations should reasonably be if the NFP number doesn't come out more than the normal deviation that we may expect, and that is, I'd say, anything between 100 and 200 or 100 and 225k or so, 125 to 225k. I think the reaction will be muted, and then we will be looking at whether the wages are giving us something, whether the unemployment rate is giving us something. But we'll talk more about the NFPs tomorrow. So this is your reaction yesterday on the euro dollar, and we can see it's really very stable. Euro dollar is stable, although the crosses are moving quite a bit, and that is just due to people not feeling comfortable with risk at all. If you look at stuff like dollar rand, for instance, that is printing new highs, and we are threatening to break above the wedge here. Actually, we are trading a little bit above, so that still tells us that the risk market, the emerging market, is not feeling too well at all. It's a selective move, because we've also seen now that the Mexican peso is starting to react very much to risk as well, and that's a bit of a new factor. So we have to be a bit careful with what's going on in risk. And just to show you as well, you know, yesterday I've tried again to sell a bit of this euro mix, but I pretty rapidly covered it because we were not holding below this trend line, and now we are pushing back towards those highs here. If ever this goes through, I think there may be another push higher for another 1 or 2%, perhaps, if this market really is so fragile on risk as it looks right now. So just to show you the EM, and usually, and that's where risk is coming back, taking aside stuff like the yen, because it's not on the risk bus yet. We are still at 149 in dollar yen, and the yen pairs are just moving up and down with what the yen really wants to do. But if you look at stuff like Euro CAD, for instance, with oil coming down, with the risk feeling a little bit less, I mean, the Canadian dollar has really underperformed versus stuff like the euro, and that is a bit logic. Of course, we're going to find it back in stuff like CAD yen as well. So that's kind of logic move for risk off as well. Oils are lower, so you see the Canada yen coming off as well, because the Canada is still in an importer of energy. So if that comes off, then your Canada yen is coming off as well. So that's for the correlations are the risk correlations are starting to get back. So lower oil in today's market means not very good for risk either. Although if it goes up too high, then it's a flight in the dollar rather. So yeah, we have to look at what's going on in risk, and that is probably going to drive the rest of the day as well into tomorrow's US jobs report. I'm going to go on a little bit shorter time frame, and you will see as well we've had this pretty strong move lower when the Aussie recovered overnight. During the Asian time, we had a very good recovery in the Aussie, and then all of a sudden, when Europe walks in, Europe trades something different, and then your euro crosses all of a sudden start to go higher again, which is also the correlation with risk that is going on. Okay, I just wanted to show a couple of those things and tell you how markets can move. It's actually pretty okay. We've had this move lower, and I think some people are calling for an inverted head and shoulder here as well. This one here, I think some people I saw it mentioned, but anyway. So if you're trading Euro Aussie, keep an eye on what's happening around 166, but then especially what's happening around 166.5. Okay, something we've been talking about in our room as well, to keep an eye on this 166.5 Euro Aussie. If that would start to go through, then that would probably mean that risk is taking another hit as well. Same thing, if I go back to this EuroCAD, we are trading around 144.90. It's the 50% of this move lower that we've seen when oil was going up. We are here at a pretty reasonable level, but then watch what waiting here, you know, traffic zone, and the 61.8. So if ever it reaches 145.70, be careful what's happening over there, okay? Because that could either start to look very toppy all of a sudden, or looking pretty explosive and panicky if we flying through, right? I don't have much to say actually on the dollar yen. I don't see much in there, just that we are coming back to that 149 level, which is telling me that the market is not on board yet with what's happening in whether it's interventions or despite the JGB yield now being above 80 pips. The market is not on board yet with a stronger yen. That is really telling me that, even though if you see some of the yen pairs come off, I don't think it's to do with risk. But if really the yen would to strengthen, I think dollar yen should start to really find tops and start to move gradually lower. That may be something for tomorrow as well on the US labor report. I don't think today we will see big shockers on the jobless claims, to be honest. What else are we watching? Yeah, Euro yen is pretty interesting because we have broken down this little range, or this little wedge, or whatever you want to call it. We've broken down, and this trend line seems to cap the debates for now. But be careful if you go back through it, because that could mean that those shorts trying to lean against this one, and that would come in around, call it 75.80, 156.75.80, which is very close to where we are now, actually. Keep an eye on that one. If that would go back through, then I think there may be some short covering. The sterling yen is also trying to make up its mind around and in around and in that zone that I've been talking about as well before, in the 150.5. It looks like a bit of your obliged transit every time sterling yen is on the move, this 150.5, and you look at the underside, 180, sorry, not 150, 180. So you see here 180, the big figure, and then where we are now, 180, 50, 60. I don't think this trend line is still valid, to be honest. But I think any move outside of this could create a bit of a move. This one could go back a big figure higher, but then sterling is not behaving very well. But if we break back below 180, I think there's a case, perhaps not going towards the low, but there is a case to go back to a bit lower levels. Okay, so I think this is a nice equilibrium zone to monitor for a break above or below. That for days when we are in a kind of transition mode, you know. Quick one on the euro dollar, I think still bearish for as long as in the short term we stay below 105.80, and then a bit longer for as long as we are below 106.30.50. I still think it's the overall picture still looks relatively clear to me. Cable brand, didn't Ryan already comment on that? Here, 121.85, 121.95, rounded up to 122, the figure. I think that's already your first zone here. If we cap there, the move is still intact. But do we have really strength or enough dollar strength in this move, or sterling weakness to go back below 121? Yesterday's bounce says no. I'd like to see a retest to see what's happening there. If it really goes below there, then we're forming already quite a few points in between, right? You're 120.85.90 already, and then we're talking again about the 120.5 that Ryan already mentioned as well. But I think the big one to watch here, if we try, or if the market tries to break the strong dollar pattern, and that might be one that you want to make a note of for tomorrow as well, is really 122. If we start to move again above 122, then that means there's something maybe turning, or at least temporarily telling us that the dollar is a little bit weaker. Anything else that you guys want to look at? I think gold is still in no man's land here. I mean, it's weak. Technicians will probably tell you that we are forming some kind of a bearish triangle or bearish pennant or bearish whatever you want to do. It is true for as long as we are below 1841. But if you look at simple levels, 1841, 45, and then the downside is 1800 really, for more action on this one. Silver bit bouncy of the lows, but then again, technicians may tell you that for as long as we are not going above 2140 again, this still looks quite bearish, and I can't argue with that right now. I'm going to wait for tomorrow's numbers to make a decision. If we get it down here without too much of a reason to really ramp the dollar higher, I may start to add a little bit again. But I'm going to be still very cautious. Ali, euro sterling. Wow, what do you want to know about euro sterling? It's really not moving much, you know. Bit of a support building, perhaps around 86.5 right now, but you see we had those spikes below. It's not really inspiring me that much. We're still looking at that 87, those low 87s, right? And then that 87.20 line. That's going to be an important one. On the downside, if you really want to look at it short term, to get back below 86.5, perhaps another 20-30 points in there, but then you are going to run into intermediate support here around 86.0520. And oh, okay. Yeah, well, I mean, you're in the right position, Ali. So I can only congratulate you. 81, 85, 80, take profit. Well, yeah, around there. So you're playing for the small intra move. Yes, okay, no problem. that's a position which is looking okay. I don't think you even need to put your stop loss that low, but let's see. Okay, Gav, if you are okay with that, I'm going to pass it back to Ryan. He's going to have a look at EURUSD CAD because Ryan has Canada in position as well. Perhaps he has a good idea about that stuff, mate. Okay. Just to reply further on to Ali, you have a weekly moving average and you're playing for 20-30 pips either side. I don't know, mate. Yeah. Okay. All righty. Okay. I got you. I got you. It's your take profit rate. Okay. Okay. No problem. All right then. Back to you, Ryan.
Okay, mate. Thank you very much. Give me a second to take back the screen. I'm just trying to do something now. I've not got an awful lot in Aussie CAD myself, but I'll share it anyway. Quick look. There we go. I know you're looking. You've got a bit tighter picture going on, Gav, from your chart in the chat room there. I mean, it's another one that's just continuing its trend, and at the moment shows no signs of breaking on the longer term. You know, quite clearly the trend is your friend in this one. Continue to make those lows. We are bouncing, but we're not getting above. You know, you could probably, you know, draw a bit of a trend line in there. We're not getting above that sort of area. In the shorter term, yeah, we're hitting a head up here. Just nicked a fresh high, which, you know, only by a few pips, you know, just opens the gate a bit for now. So dips, you know, going to be pretty, you want them to be limited probably to around there where we've just seen that prior low coming in. Oh, a bit thick, I'll have to change that. That's where you want to see dips holding for the moment. If they do that there, then it gives it a bit of a springboard to move on to that highs. And maybe, as I said, now the door's been opened a bit on that new high, it gives you a push up, and then you can be looking at 87.60s for that. It's a bit like what I was talking about with dollar CAD. You know, we had the high yesterday, and then it's just nicked another high today. You know, it's finding itself in decent support, you know, similar picture. So it gives it the impetus to move on further up. So Aussie CAD's pretty much in the same position as that one. Now, Ali, I want to just go back to your point, or the point I was making before about, you know, making millions out of trading. Of course, you can make a lot of money in trading. That's never in doubt. But just like I was talking about your expectations for prices when trading, you have to have expectations for trading generally as well. Let's look at the reality of it, and I won't go into it too much because we could probably do a whole show on it. Now, I know for a fact that the majority of people who come into this market don't come in with a big account, and that's a hindrance from the start, because what you have to do to make millions or even $1 million in trading is either risk a lot, gamble, and be very lucky. Okay, the only other way you can make a lot of money in trading is to scale up your account. If you've got a 25 grand account, okay, you got to make 4,000% to make $1 million. Okay, now in your case, you want to do it over the next 20 years or so. Okay, that's fine. So you name me someone who's made 4,000% over 20 years. You know, you've got to go some big guns to turn something like 25 grand into $1 million. Okay, what you want to be doing is setting your sights low first. Okay, forget about making millions, forget about being a millionaire from trading. Okay, first thing you want to do, because the majority of you guys and girls who are trading are not trading full time, you're probably trading as you know, as alongside work. Okay, think about how trading can add to what you earn from working. Okay, think about it just as an income boost. Okay, what does it mean to make a difference? If you're on a salary of $2,000 a month, okay, it's not a lot, I know, but I'm just picking a number out of the air. Okay, if you can make a couple $100, $200-300 a month trading, okay, now your salary's 2,400, 2,500. Okay, you've already added on 20% to your salary, give or take. Okay, just from trading. Okay, and that's not making a huge amount. It's making a couple $100 a month. Think about how that affects your life. What amount of money would improve your life? Even if it just pays the bills, even if a couple $100 a month pays your phone bill, pays your cable bill, pays your utility bill, whatever. Okay, that's something that you weren't paying for before. And now trading is becoming a part of your life. The money that you're earning is becoming a boost to your income, and you want to scale that up. And maybe you can get it to a point where you're earning just as much through trading as you are through a job. And now you can think, right, well, I could either do that. I'm getting double paid. I'm getting $2,000 off my job, and I'm getting $2,000 off of trading. Now I'm getting $4,000 a month. Okay. Still, you're not going to be making a millionaire out of yourself, but you've improved your life somewhat financially. Okay. That should be your first consideration when trading. All right. Because I know a lot of you, majority of people who trade do not have 100 grand, 200 grand, 300 grand accounts. Okay. So use trading to scale up your income. Make your life a bit better if you can from that, because you can do that without gambling, without risking 10, 20, 30% on each trade. You know, if you've got a 25 grand account and you stick to the rules of risking a maximum of 1%, okay, that's $250. Okay. That's not going to change your life. You're not, and if you double that, if you make $500 on a trade, you're not going to be making yourself a millionaire in 2 years. It's not going to happen. So you either use the money that you make to add to your financial position and, you know, treat yourself, you know, that's your little discretionary spending or whatever, or you build up your account. You don't take your money out, you scale up. So let's say you have a good year, you make 20% on 25 grand. Okay, now you've got a 30 grand account. Okay, and then you can scale up again and scale up again and scale up again. And if you do that, following the rules, your 1% is now $500 because you've got 50 grand in your account. You're scaling up, and slowly but surely you will then start to make decent money. But it's a long process. Okay, you're not going to go from 25 grand to $1 million in a year, 2 years. Forget about it, unless you're gambling. Okay, so keep your expectations real for trading. And what really would affect your life from making money in trading? Is it just extra pocket money? Is it just to, you know, pay for a holiday? Keep it small, keep it realistic, and see where you go from there. And if you become successful, you build your account. I'm not a millionaire on my trading. What I've done from trading, I did it from the very first day I went local in the pit, trading my own money. I wasn't competing against all the other people in the pits who were like, yeah, I've made 15 grand today, I've lost 20 grand today, it don't matter, all that bollocks. If I made £500-600 in a couple of hours, I was out the door. Why? Because in the real world in the UK, that was someone's minimum wage. That was a low paid wage. That was a mortgage payment for some person a month, 500-600 quid back in those days. And I've made it in an hour, 2 hours, boom, I'm out the door, mate, because I'm living in the real world. And that's what made a difference to me. I never saw this as a game to get millionaire rich. It was my income, my life. And I slowly built it up, squirreled away the money, built up my account to a point where, you know, now I am, you know, financially stable. I can look after my family. When I retire, I can take it easy. But I'm not going to be sailing around in £500 million boats or anything like that. But I've made my life easier financially. And that's what you've got to look at from trading. Okay, forget flying around in helicopters, flying money out the window. Very few people that happens to, just the same as any other pressure. So yeah, just keep your feet on the ground, people, and learn to scale up and improve your lives just in a small way. And thus ends that lesson. As I say, we can have it's probably something if we have a quiet market near a Christmas or something, we can have a longer talk about that and get into expectations for trading. But for now, that's it. Keep an eye on the data later on. Obviously, we're waiting for the big one tomorrow. Thank you as always to K-Man for his valuable insights, and obviously Steve and all the mods who keep this show on the road. Have a great day, everybody, and we'll see you all tomorrow.
Yeah, I'm jumping in my Lambo and back to the yacht after the show, and see you all tomorrow, guys.
I want a film of you trying to get into a Lambo, mate, with your knees.
All right, that's it off you. Bye-bye.
Cheers.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.